Hello guys, welcome to Summer Brain FX. In today's video, we are going to be doing a recap on some of the trades we took during the course of the week, and as well as some of the ones we are looking at for. Okay, that's an update. Of course, we are going to be using our strategy, which is the smart money concept. Following a market structure. So in smart money concept, of course, we look at break of structure, look at order block, we look at fair value gap, we also look at liquidity or inducement. But today we're just going to be sticking with this. Okay, the break of structure, order block, fair value gap, or imbalance, marketing efficiency. All right, so let's dive in. So the drawing before us, it's something we are going to be learning today, which is very, very important. Okay, so following our market structure, we see how price was reacting in this drawing. We see price was coming this way, and then there was a break of structure. From this zone, there was an impulsive move. This was a demand zone, so there was an impulsive move to the upside. Okay, there was an impulsive move, but there was really no valid break of structure here. But this was the zone where we had that impulsive move to the upside. So, but there was really no valid break of structure. So now price came in, got into this zone, and then there was a break of structure to the upside. Break of structure to the upside. So now this now become another valid zone, another zone. So now if we have this zone, zone A and zone B, let's say this is the first zone, this is the second zone. Okay, where are we going to take our trade from? Are we looking at this zone or we are looking at this zone? Okay, so you see, at times price might react this way. You can have price coming from here, and then it comes in, take out this zone, and then got into the zone before it finally moves up. Before it moves up, we can have price reacting that way. Okay, we can have price reacting that way, and in that case, if we have price, okay, let's use this. If we have price doing this and coming here, taking us out, and then moves up again, okay, in that case this becomes an inducement. Okay, this place becomes this zone becomes an inducement. Okay, where price coming, takes us out and gets into the zone and then moves on. But you see, in this situation, that did not happen. So what happened? Now this break of structure, remember, we always, in a smart money concept, we always look at break of structure and order block, which is where our demand zone is, and then fair value gap, and before we take our trade. Okay, so we see that this break of structure was caused by this particular zone. This first zone did not break this structure. Okay, so what this zone did, there was an impulsive move which didn't break any valid structure, but this one came in, broke this structure that was valid. So this was a valid break of structure here, caused by this zone. So we see that in the future, price came in, tapped into the zone. It didn't take us out. This zone didn't act as an inducement whereby the market will come into the zone. Rather, the market acted on this zone. Okay, after price came in, acted on this zone. So what did we look at for? We looked at for a confirmation entry in our lower time frame. Okay, of course, our confirmation entry, we always look at for something like this. Always look at for something like this, a break of structure, and then price came in, and then before we go. So in our confirmation, that's our confirmation entry model. Okay, where we'll have a break of structure, and then price will come and tap into that zone, which is order block on lower time frame, and then it moves. So that's what we saw here. So that was a confirmation entry. Okay, so that was a confirmation entry model here. So that's the same thing, and then here there was a break of structure to the upside. So price came and did that same thing, and then it went. So now looking at these two zones, when you're having two zones, the one to choose. Okay, like we said, in this kind of situation, we look at for where price broke structure. So it was here that price broke this structure, this valid impulsive move, not this zone but this zone. Also, another thing to confirm that this zone is going to hold is that When price gets in, we move to our lower time frame, we'll find our confirmation entry before we decide to take a trade here. Okay, so if you consider all these things, you are going to be on a safe side, on the safer side. Okay, coming down to our chart, let's look at what we saw here, and then we'll see. So the same thing happened here, the same thing happened here. Okay, so this zone, we have two zones, the zone A and the zone B. So price came in, and then there was a break of structure. Now this break of structure was caused by this particular zone here. This zone caused this impulsive move that broke structure. So this is the other block we are looking at for, not this one. So this particular zone here, though we always say that in situations like this, we always look at for the more extreme zones. Okay, because most time, like we said, price will come in and then take out this zone and then come here and react before going up. Okay, but you see, and if it happened like that, that means this zone would have become an inducement. But you see, that did not happen here. So why didn't that happen here? It's because of this was the zone that broke structure. Okay, so this break of structure we're having here was caused by this zone, not this zone. So this become our valid zone. Now you don't just say, okay, this is going to be our valid zone, because price, of course, it can do its thing, coming here, taking you out, reacting to this zone before it goes off. But you see, how do we now confirm that this is the zone we are going for? We saw it is this zone that broke structure, not this particular zone. This zone broke structure. The next thing we are looking at for, we wait for price to tap into that zone. We look at for our confirmations entry before we take a trade. So we'll see price came in and tap into our zone. If we move down to our lower time frame, let's see the 10 minutes time frame. Okay, let's go to our 10 minutes time frame. If we go to our 10 minutes time frame, what do we see? We saw there was so price came in, tap in, it came in and tapped into our zone. Let's look at for a break of structure. So when price came in and tapped into our zone, so it came in, there was a break of structure here. This was a break of structure. So this was a break of structure. So a break of structure. So why do we call this a break of structure? Because of this candle. You see, this was a candle, a full bodied candle that closed above this structure. So this was the previous high that was taken by this, so it formed a new high, took this high. So this was a break of structure, a valid break of structure. That's why price came in. Now this was the zone that triggered that break of structure. This zone triggered the break of structure. Okay, so what do we do? So we mark out our order block there. This was the order block. Okay, this was actually the down candle that caused the break of structure, but you can just take all the zones. Okay, here would have had a stop loss below this. So price came in, of course, broke structure to the upside. This was a break of structure to the upside. Comes back to that zone, that other block that caused the break of structure in this lower time frame, and then price went up. And now where would have been our target profit? This would have been our target profit. Okay, so this would have been our target profit. So if we enter here, this would have been our target, the next demand zone, in the upside. So price came in and got there. So this is where we got out of the market. All right, so this is where we got out of the market. Now you see, it came in. This also acted as an order block. Okay, showing that price is going up. Now we took out this trade because there was a break of structure to the upside. Okay, there was a break of structure to the upside, and price came in and we took out this buy. But when price came in, there was no break of structure here. Okay, we didn't have another break of structure here. Okay, there was no break of structure here. Had it been there was a break of structure here, we would have decided to take this trade. Okay, had it been had something like this, if you had gotten something like this, okay, if you had gotten a break of structure here, okay, and then price comes back to the zone, we would have looked at for a buy here. But since that did not happen, since price came in, entered that zone, we got out from this buy, and then price came back. There was no break of structure, but price just came in respected this zone and it went up, we wouldn't have entered this, okay, because there was no break of structure after price came in. Had it been there was a break of structure to the upside, we would have entered this trade here, but we didn't do that, okay. But since price was having a strong bullish momentum, that's why price came in, it reacted to the zone and then it went up. So if we look at it in a higher time frame, let's go to the daily time frame. So this is our daily time frame. Look at our bias. We discover that our bias is bullish, okay, it's bullish. We have a bullish bias, okay, because this trade, looking at what happened here, there was a very big market inefficiency. There was a big inefficiency here, okay, meaning whatever is happening here, there's going to be a big bullish movement that will come, tap into this zone, fill out all this void before it goes down. That's why there was a very big bullish momentum here. All right, so that's what happened. And then of course, looking at it in a high term bias, we discovered that this instrument was actually in a downtrend. So in a downtrend, meaning there was a high, a lower high, lower low, lower high, a lower low. Price broke structure to the downside, okay. So we're expecting price come into the zone and sell. So what are we looking at for in jump 10 indices? What are we looking at for here? We are looking at for sell here. So if we go down to a lower time frame, and we're going down to a lower time frame, okay, this is 8 hours time frame, this is our demand zone. So we are still waiting for price to come into the zone and then sells off. Okay, we can still refine this order block if we go back, if we go to our 4 hours time frame. So these are 4 hours time frame, okay. There's nothing to refine there in a 4 hours time frame. So if we go to our 2 hours time frame, our 2 hours time frame, so there's really nothing to refine there. So let's just stay with this 4 hours time frame. So we are waiting for price to come into this zone, okay. So in the future, we are waiting for price to come into this zone, taps into that zone and then sells off. So this is what we are looking at for, okay, for jump 10 indices. All right, so let's head into another instrument. So okay, let's come to jump 75 indices. Now what happened in jump 75 indices? Now as at last week, we were here where we have this demarcation. We were here last week, okay. So what were we looking at for here? We were looking at for, all right, so we're looking at for let me go to our 1 hour time frame. So for jump 75 indices, we were here, so we're looking at for price. So these are 1 hour time frame. So we're looking at for price to come here, because this is our zone in the 1 hour, okay. This is our zone in the 1 hour, and this is another zone. This is another zone, which is the same thing that happened in this model that we showed here, okay. Now when you have two zones, zone A and zone B, which one are you going to take your trade from? Normally we used to say that we go for the more extreme zones, okay, but at times it doesn't happen that way, okay. So here, like we said earlier, this was the zone that broke structure, and then when price came in, there was a confirmation entry before we took our trade. So price didn't react to this extreme zone, rather it reacted here. So that's the same thing we are going to see in V75, in jump 75 rather. So price came in, there was this two zone. This was zone A and zone B, okay. Because if I zoom, we discover that this was a zone that caused this break of structure. So this zone caused this break of structure, okay. So it triggered the break of structure, and then price came in. After this break of structure, there's an imbalance here, there's a void here that was not filled, okay. So normally we're expecting that price will come in, fill in this void, okay, fill in this void, fill in this void before it moves off. But that didn't happen. Didn't happen. Meaning, if we're waiting for price to come in, okay, if you're waiting for price to come in, to take out this, you see, we even marked this. This was so okay. We even marked this. Okay, when we're doing this analysis last week, we even marked this as an inducement zone, meaning that this is our zone we are looking at for, because there was still an imbalance here. So we expected price to come in, take out this low, okay, tap into the zone, and then it goes off. So that's what we're actually looking at for. But that did not happen. Okay, so it's still the same thing. When we have two zones, zone 1 and zone 2, zone A and zone B, which one should we go for? So we waited for price to come into this zone. It didn't come in. Rather, price reacted in this our zone. Okay, it ignored this imbalance. So price reacted in this particular zone. Okay, so for we to know that we can trade the zone, we can use this zone as our demand zone, that this zone is valid for us to take our trade, we need to use the confirmation entry. Okay, so price came in. Of course, this zone also broke structure. This particular zone also broke structure. Here there was a break of structure caused by this zone. Price went up, and then price came in, tap into that zone. So instead of it taking out this zone and acted in this other zone, price rather acted in this zone. So what do? We will go to our lower time frame and we will look out for our confirmation entry in the lower time frame. So we move down to our 10 minutes time frame. So this is our 10 minutes time frame. All right, so price came in. Of course, price in our zone. So what do we see? We saw a break of structure here. There was a break of structure to the upside. Okay, break of structure to the upside. But you see, there was no valid zone here. There is no zone here. We are not seeing any imbalance here. We are not seeing any any zone here. So what do? We go down to our 5 minutes time frame. So in our 5 minutes time frame, you can see it's clear here. Okay, so price came in having tapped into our zone. Okay, price came in, so there was a break of structure to our upside. So when we see break of structure, remember we said we are looking out for a full bodied candle breaking the previous low. So this was the previous low. So price came in, broke this previous high rather, okay, with a full bodied candle, not a wick. If it were to be a wick, that wouldn't have been a valid break of structure. Okay, but we are considering it a valid break of structure because it's a full bodied candle. So price came in and then it broke structure to the upside, and then this was the zone that caused the break of structure. This was that zone that triggered the break of structure. So now this would have been our entry. Okay, and then our stop loss, of course, we can just take it to be below this zone. All right, so price came in, took out this high, break of structure, and then came back to this hour zone, and it went massively. Now where would we where would we use as our target profit? Now this would have been our target profit because this was the previous high. Okay, so entering from here, this would have been a target profit. I would have loved to get out of here because if you look at this place, this is another demand zone. Okay, so this is another demand, this is supply zone because price coming down, it took out low. Okay, so we're expecting that price will come in and then sell from here. So buying from this place, we use this demand zone as our exit. So we would have gotten out of the trade from here to be on the safer side, because you saw price came in, of course it still went in, and then it was going down. So we wouldn't have allowed this to happen. We would have gotten out of the trade at this point. Okay, so this is how we took this trade in jump 75 indices. All right, so now if I go back to our daily time frame, this is our daily time frame. We'll discover what's happening in jump 75 indices. We'll see that there's a big void here. So price is still going to come down here. Okay, it's still going to sell. On off, of course, there's also another void up, meaning price can still trade to this zone before it finally, this is what we're talking about. It means price can still trade to this zone before it finally comes back. Okay, or price can decide to just get into the zone, sell off before it comes back. Okay, so whichever way, we are just going to be watching it. So let's go back. So this is a 4 hours time frame. So these are 4 hours time frame. So what we're seeing here in a 4 hours time frame, so this is a supply zone. Let's go to our 2 hours time frame. Now, this is a clear supply zone in our 2 hours time frame. Okay, let's refine it to 1 hour. So this is a clear supply zone. Okay, clear supply zone. So what happened here? What do we see? These are 1 hour time frame. So price came into this zone. Okay, it came into the zone, and what do we see? We saw this big rejection here. Okay, so we are looking at price selling, probably selling down to this zone. Okay, can still sell further, or it will come here and react to this zone. We saw inducement. It would have now, this would not act as an inducement. It would have tapped into this zone that its pricing tapped into before. It might tap into this zone before it goes up. Okay, so we are looking at it that way, of course, but it's going to be depending on what the market will be doing, the reaction we are seeing before we decide on what to do. But looking at this is a valid supply zone. Okay, because we saw this rejection, this big rejection here. So price did not breakout. Okay, had it been with this breakout was a full body candle above this other previous high, we would have known that price is actually going bullish. But since it did not break with a full body candle, this was just a wick. So a wick is not a break of structure. Okay, so we are just seeing a wick. So what are we expecting price to do? So we saw this rejection, price sold that. Okay, if we go to our 30 minutes time frame, we are still seeing that rejection. Okay, there was no break of structure. So what are we expecting here? We are expecting that price will come in, okay, to this zone. Okay, you see that there is a break of structure to the downside. There's a break of structure to the downside. This is a break of structure to the downside here. Let's get this. Okay, right. So this is a break of structure to the downside. This is a break of structure to the downside. This is a break of structure. Why is it a break of structure? Because we saw a full body candle. So this price took out this previous low and it closed below. This is why it's a valid break of structure. So we're expecting that price will come in. So we're expecting that price will come in, okay, move into this zone. We'll look at for a confirmation entry, maybe in the 5 minutes or 1 minute time frame, and then we are going to sell massively down. We are going to sell massively down. Okay, probably price coming to this hour zone and then goes up and goes up. Okay, or because of the momentum is going to use in coming down, you might see price just breaks below this. All right, so that's what we are looking out for in jump 75 indices. So price will come in, not for price coming in, typing and goes. Of course, price can always do its thing. The market can always do its thing by just ignoring you and then just going up. But whichever way, we always have a confirmation entry to be on a safer side. Okay, all right. So lastly, we are going to be looking at jump 25 indices. So this is jump 25 indices. Okay, so what do we see here? We are still seeing the same thing. Okay, when we have okay, let's go to our 2 hours time frame. Remember, we always do a top-down analysis. What do we mean by top-down analysis? Top-down analysis simply means when you're starting from a higher time frame and going down to a lower time frame to see to spot a good entry. Okay, okay, it helps you a lot. So you don't just go to any time frame, any lower time frame, okay, any time frame. So you always start from a higher time frame and you do your analysis down to a lower time frame. So that's what we call top down analysis. Okay, now looking at this trade, okay, if I should come to our daily time frame, this is what jump 25 indices has been doing. So of course there's this big void down here, meaning we're expecting price to come in, fill this void before it goes up in the future. So we are expecting price to do this in the future, coming in, fill all this void, and before it goes up. Okay, all right. So, and also if you look up here, if you look up here, we are still going to see a big void up here and a big void up here, meaning that price also is expected to come fill this void in the future and fill this void as well. So we can have price reacting like this, coming here, fill here, retrace, fill all this void before it finally goes down to this. Okay, so are you seeing? So it can go down direct from here, or it will go up because of this void we are having. So go up, fill this void, retrace, probably fill this void before it sells down massively, so we are looking out for either price doing this, okay, sell from here down, or looking at price going up here and then coming down before it sells down massively. So it's all going to be dependent on what the price is doing for we to know which direction it's going. All right, so let's go back to our lower time frame. So these are 4 hours time frame. What are we seeing here? Go back to 2 hours time frame. So okay, so what happened here? Okay, so in last week we were looking out for price. We actually, this is our 2 hours time frame. Now this is a zone. Okay, this is our order block here in our 2 hours time frame. Okay, but how did we miss this trade? Why do we miss this trade? Because we went down to our 1 hour time frame. We went down to our 1 hour time frame. So let's just wait for this to load. All right, so because we went down to our 1 hour time frame, and then we saw an order block in the 1 hour time frame. So we refined this down to our 1 hour time frame. So we're expecting for price to come in. And take out this low and then taps into this zone before it goes up. So that's what we were looking at for. Okay, so price never did that, meaning we over refined this place. So we use the 1 hour zone. Okay, so we would have just stick to the 2 hours zone, because it's a top-down analysis, so we don't just stay on a particular time frame. Okay, so you look at from the higher time frame down to the lower time frame. You look at for what price is doing in all the time frames, so that you know how you can enter your trade. Okay, so if I go back to the 2 hours time frame, this is what we're saying. We discovered that in the 2 hours time frame, price had already entered our zone. This is our order block. Price had already entered that zone, so it already taken out this low this low now become an inducement, but this one here is not inducement. Okay, so price already took out this low and then it taps into our zone. So this is what we are seeing in the 2 hours time frame. So this is what we are seeing. So now price having tapped into our zone, we can now go to a lower time frame to look at for an entry here. So we wouldn't have missed this trade waiting to refine it to 1 hour. So we would have gotten this trade by using this 2 hour order block. Okay, so if we go down to a lower time frame, we would have seen an entry here. So of course, if we are entering from here, this will be our target zone. Okay, this zone. So let's go to a lower time frame. Let's go to the 15-minute time frame. So if we had come to the 15-minute time frame to look at for an entry in this zone, what would we have seen here? Now here there is no valid break of structure. There is no valid break of structure because this is not a break of structure. This was just a weak break. So this is not a break of structure. So we are not seeing any entry in our 15 minutes. So let's go to our 10 minutes. If we would have seen any entry. So coming down to our 10 minutes time frame. So what do we see? This is here. We see a break of structure. So now this is a break of structure. So price tapping into our zone. So there was a break of structure to the upside. This is a break of structure, a valid break because of the candle close above this. It took us this previous high, close above, and this was the zone that caused that break of structure. If we have this, let's have this. So this is that zone. This is this zone, the other block that caused the break of structure. Okay, so this was that other block that caused the break of structure. So this other block. So we're waiting for price to come and tap into the zone again before it goes off. Now if this is our other block, we would have made our stop loss to be, let's say, below this zone. This would have been a stop loss. So price came in, tapped into our other block, and then it went up massively. It went and got to the spot. So this is how we would have spotted that buy. Massive move up. Okay, and also there is also another entry that we took. This sell, we took this sell. So what happened here? We discovered that at this zone we saw some days ago, this particular zone. So what do we see here? What made us to enter this trade? It was because of this rejection we are seeing in this zone. Okay, this was a massive rejection. We saw this rejection here in our 1 hour time frame. There was this rejection candle, big rejection, meaning that price is still heading to going down. Okay, and then of course remember in this 1 hour there's this other block we were still looking at for here. So meaning if price is going to be selling massively, it's likely going to come to this other block. Okay, which of course it didn't come, but it actually sold. So how do we take out this sell? Because of this rejection candle, big rejection candle downward. Okay, every candle tells a story, okay, of what the market is doing. So this rejection candle, the big rejection here. So what do? We'll come to our lower time frame. So after seeing that rejection, we came into our lower time frame. So we saw something here. So this is where the rejection happened. So and we saw a break of structure to the downside. So we saw a break of structure to the downside. There was a break of structure to the downside. So this was the zone that caused the break of structure. So price came in, tapped into that zone, and it sold massively. So we got this trade because of this rejection candle we saw in this zone in our higher time frame. So in our 1 hour time frame, this was the rejection candle we saw, meaning price is still going downward. The sellers were still in control of the market. So that's how we took this entry. Okay, all right guys, so just take your time, and of course take your time and look at the example we have made. Okay, we have done the example we have looked at. So keep practicing. As you keep practicing, you are going to be getting better at it. Keep looking at the chart. Okay, make notes, take your time, look at the charts, okay, before confirm your entries. Make sure you have your confirmation before placing any trade. Okay, so as you keep doing this, you're gonna keep getting better at it. Okay, all right. And then of course, do not forget, do where to like, do where to subscribe to this channel and like our video as well. It is very, very important. It's going to help us so that whenever we post a video like this, you are going to be seeing it and receiving a notification. All right, so till we'll see you in our next video. Bye and take care.